Welcome back. Hope you're having a good morning. Well, we listed out a lot of stocks that you need to track, and let's get in Prakash Diwan to help us out with some further analysis. Morning, Prakash. Good to see you in. Hope you had a good weekend. Prakash, I wanted to ask you about Asian Paints. In light of Grasim making this aggressive push, I was reading a note coming in from Jefferies, and they're saying that if Grasim can head to that 10,000 crores odd, it would be a risk to volumes for the industry. It could be a risk to margins as well. Asian Paints is enjoying margins of more than 20%. So you'll see ad spends getting up, you'll see competition in terms of pricing, and it may not be the shorter battle like what we have seen with HUL as well as Colgate in 2000 and 2010. This could be a longer battle. What's your take? How do you approach Asian Paints as well as Grasim from here on?
So good morning, Nigel. Thank you for having me on the show. Interestingly, this is a battle where the lots that's kind of getting defined as time progresses. The launch itself we were not very sure in terms of where they would peg themselves in terms of price points and, what is it that their aspirations are. So now that it's clear that, they're looking at being a very respectable number two, which means that Asian Paints, they acknowledge the fact that Asian Paints has its own strength and presence in the market. It's the smaller players, as I mentioned the day of the launch as well, who are actually more vulnerable. So if you really ask me, the battle is not so much between Asian Paints and Grasim at this point. It's going to be between Grasim and the host of other players with the likes of Berger, Astral, JSW. I mean, the ones who have just started getting into the business and will probably find it even more difficult to establish themselves. They are the ones who will have to up the ante in terms of spend, in terms of distribution, commissions, and all of that. The other thing that I feel we need to also look at, Nigel, from a segment perspective, is that Grasim's entry with its own distribution strength on the basis of the cement, network, cement resellers network, it's going to actually add to the volumes to a large extent. The paint market is fairly robust in terms of where it can go. There's enough demand, there's enough pent-up demand that needs to get met with. So I would believe that they would also find it easier to cater to that rather than to take customer away from the existing names like Asian Paints. So there will definitely be competitive intensity, which means margins do get under the pressure. But if the revenue growth continues to be robust, I believe it won't be such a big significant cut on Asian Paints earnings going forward. And already the stock has given you that comfort in terms of softening down on the valuations. So if the valuations persist at lower bands, it'll probably be a good time for people to look at Asian Paints rather than to bank on only Grasim to prove itself in the next few years. It's taken them decades to establish this presence. Asian Paints taken decades to establish itself in this kind of a slot. It's not going to be easy to dislodge them, and I'm sure they'll come up with more innovative stuff themselves. So I would believe it's going to be the smaller names that will be more vulnerable.
Okay, well, the MVP, so to speak, of this year has been BPCL, right? I mean, the stock is up 37% this year. And this morning, Morgan Stanley has written a note where they say that BPCL and HPCL continue to be their preferred picks despite the rally that we've seen already. Is it worth buying even at this price?
Good morning, Sonia. So I think if you really compare just for the basis of valuation and what business model each of them pursue, there's small incremental tweaks in each of their ways of generating revenue. I believe I wouldn't look at HPCL for sure. I would look at BPCL now at this point in time. It's IOC that still continues to offer a very huge potential in terms of the dividend payout ability, the kind of cash flows that they are looking at generating. And you're not paying too much for the valuation. Of course, you are getting this a few months back at 3.5 times multiples. Now it's probably 8, 9. But given the fact that the earnings will continue to catch up, the multiples won't look so rich. And what you need to understand is that these are companies that actually have an asset base which could be leveraged to do much more in terms of incremental value. So once green hydrogen comes through and all of those, you will start seeing them sweat their assets much better. And the dividend paying capabilities will not change at all because they're not looking at very significant capex in any of the verticals. So I believe there is room. I agree. There was, in fact, some time back a report which scaled down the expectations in terms of earnings and said the valuations were rich. But I think those are going to be entry points for long-term investors every time something sentimentally happens to soften the prices.
Got that. Prakash, hi, good morning. Quick thoughts on two names. One is ABB, which was the big winner last week, went up 20%. And another one is Idea, where, of course, we heard comments from Mr. Birla saying that, they remain sort of on track to support the business, and that's kind of raised hopes that maybe something will happen. So just your thoughts on these names.
Good morning, Prashant. So ABB, we've understood, ever since they kind of got themselves refocused by hiving off what they globally felt was not the greatest of areas to pursue. They've demonstrated the ability to grow this business with very good margins as well. So, this is something like what happened to L&T last year in beginning of 23. You saw them focus only on the high margin business, absolutely keep themselves out of the mass markets, and that started reflecting in the consolidated margins. The same thing has happened to a large extent to the Thermax and Siemens of the world. But I think ABB is probably well priced. This is something where the global play and the domestic play kind of start aligning. What's happened to Cummins from 1200 to 2400. So these are things that you buy when the change is just about to start impacting the business. The inflection point is probably past. We're past that. So I wouldn't expect any kind of surprises to continue there. It'll probably be more range bound, but keep outperforming for sure. So if you have it, you hold it, but whether to buy it at this valuation, you may not have that kind of an alpha. On VI, Prashant, my sense is, while Mr. Birla did mention about the continued commitment to that business, it's look at the way the digitization demand in the country is and precipitated more by government programs, right? So if VI were to go down, it would have gone down long back. It's a very clear fact that VI is not going down. It probably will start getting some more once the capital infusion happens. It will start flexing itself in the qualitatively better circles. Maybe doesn't want to be a pan-India player as much as a Jio or a Bharti could aspire to, but in the pockets that it does, it will offer stiff competition as a respectable third player. So I believe things will start turning around. But the price hike that you've seen in the last week on back of these expectations, prices in a lot of that goodness. So I don't expect it to kind of keep growing at this pace. In fact, the challenge will be most investors will want to exit at certain levels which they've been waiting for. So this happens in any kind of a turnaround. We've seen it in Suzlon. Started seeing it in Yes Bank. When things start moving from an absolute rock bottom, at every 1 rupee move, there are people who have targets for exiting. And that's going to keep a lid on the movement of the stock. But let's see, I think it's positive for the ecosystem, whether it's Indus Towers, some other tower companies. There's a host that's going to change if VI starts surviving and doing much better than what it has been doing till.
Prakash, I wanted your thoughts on Dixon Tech. It's launching a new factory in Uttarakhand. There is a pact that the company has signed for manufacturing of mobiles, etc. And this is a stock that has given great returns to shareholders in the past. At this price, how does the risk reward look?
No, Sonia, interestingly, what's happening is one of the reasons why some of these stocks like Amber and Dixon corrected in the last couple of years after the stellar run that we saw when they started the business is because there was a huge dependence on some of the larger OEMs, and whatever advantages they got through the PLI and scaling up was actually taken away by the OEMs given their dependence on these. But the new product mix, the kind of diversification that they're doing is making them much more smarter in terms of the overall business trajectory. So I think the valuations also, of course, they're still rich because of the scarcity premium or whatever. But once the valuations soften a bit, these could start getting to feature in portfolios as long-term bets because they absolutely ride the India story in terms of the export orientation, the strength that we are getting in some of these niche products. So I'm quite positive on that space, but we are looking out for better names, smaller names, which still have much more headroom to grow rather than the largest ones, which might take some time to kind of grow from here. But yes, there's absolutely, and this news flow actually reinforces the fact that they will continue to outperform the market through this smarter product mix, and hence you could look at them as attractive bets with sort of valuations.
Okay, all right. Prakash, always good hearing your thoughts. Thanks so much for stopping by. Wishing you a good Monday.
Thank you.
And we'll touch base all through the week.